Fantastic. I hope you're all well. Hey, Joachim, how are you doing? Just want to check again. If you can put it into the chat, let me know if you see my screen okay, you hear me all right. Just want to make sure that systems are running good and perfect. Before we get started and get going, quite an exciting trading period we have coming up. Oops, let me move that away. So let me know. Hey guys, how you doing? Hope you're trading well. If you're trading well, if you're having fun with your trades, let me know as well. Good, good, good. Very nice. Move that aside. All right, one more minute and we'll get started. Let me know. If you have any questions as well, please feel free to put it into the chat. Let me know if you have any questions. I'll be more than happy to help you with your trading questions as well. All right. Let's one more, just about to get started. Let's see. I got to fix something here. Okay. All right, let's get started now. So welcome again, everyone. We are here with the IronFX webinar series. What we'll be doing today is I will be looking through the markets. I'll be guiding you through my thoughts, ideas, views of the markets, what could happen, with the news that's been happening already. Where could the dollar head towards? Where could prices move towards? Okay, so if you have any questions, please feel free to let me know. But as usual, a quick disclaimer is that any information in this webinar should not be construed as investment advice or an investment recommendation, but instead as educational material only. This material is the personal opinion of the authors, and the clients' investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. So please remember, what it means is that you want to do your own due diligence before you jump into any trades. Make sure you check your charts, make sure you check and make sure your leverage is, you're trading with good leverage, over trading, over trading with too much margin as well. And you want to make sure that whatever you're trading with, you're comfortable with the methods, and you do your own analysis as well. All right. So let's get started. Hey, Boniface, how are you doing? All right. So take that away for now. And let's go straight into the news first. All right, let's go straight into the news first. I got a little bit distracted. I just started realizing that the prices have been moving quite a bit since we started just before we started the session. Okay. So again, hey Eric, how are you doing? Hope you're well. Okay, so what I want to do here is I'm going to share with you what has happened into the news so far. Okay, what has happened into the news so far? What we've seen is that at 2 a.m. this morning, we had the US FOMC rate statement. 2 a.m. this morning because it is we are in GMT +8. So 2 a.m. this morning, we had the US FOMC, and they actually increased rates from a 3.25 to a 4%. Okay, so they increased rates by 75 basis points. And also what actually happened is that, I'll show you here onto the charts. I'll show it to you now, H1 time frame. At 2 a.m., you can see here when the news was released, the dollar index actually shot straight down. Okay, the dollar index shot straight down. Reason being that if you read into the statement, Okay, we'll read the statement together here. If you read into the statement, it's all quite standard so far. They actually spoke about increasing rates to 4%. But the main thing here is that they stated that the committee, in determining the pace of future increases into the target range, the committee will take into account the cumulative tightening of monetary policy, the lags in which monetary policy affects the economic activity and inflation, and economic and financial developments. Okay, so what actually happened here was we saw that markets viewed it as a little bit of a dovish stance from the FOMC, because they're talking about, hey, we might slow it down, we might tweak the policy depending on economic performance. So what we actually saw was, hence, the the dollar index fell from that 111.33 to a low of 110.43. Okay, a big drop. What's the Fed? The Fed is the US Federal Reserve. It is the central bank for the US, right? Central bank for the US. What the Fed does is they control interest rates decisions. They control monetary policy, as in printing more money or printing less money. And with that, the main target from the Federal Reserve is to bring in inflation down, or bring inflation and keep it at that 2 to 3% level. Okay, right now inflation in the US very high, so the rates are increasing. They're increasing interest rates to bring down inflation, or to try and bring down inflation. Okay, so to answer your question there on what's the Fed, Federal Reserve, we also call them the FOMC, the Federal Reserve Open Market Committee. All right, so we saw that move towards the downside because of those lines there where it says that the pace of future rate increases will depend on monetary policy, the lag, overall economic activity and inflation, and financial developments. At first, it was viewed as a bad news, and that's why we saw this drop. But as you can see, after it dropped, it reversed very strongly straight back up within the hour. Even if I showed this to you on the 15-minute time frame, you can see here at 2 a.m. it dropped for 15 minutes and then quickly reversed back up. Why did it reverse back up? You'll notice that it reversed back up at 2:30 a.m. GMT plus 8, right? It reversed at 2:30 a.m. Why did that happen? You'll notice here, again, back to the news on Forex Factory, at 2:30 a.m., we had the US FOMC press conference, right? The press conference is where the chairperson for the Federal Reserve sits there, answers questions from the press, from the media. And one of the lines, or one of the statements he presented, Fed Chair Powell presented, was that the terminal rate, right, the target interest rate level that the Federal Reserve were planning or expecting could be higher. All right, so I'll show it to you here. The headline. Where is it? Here. Okay, on ultimate rate or terminal rate higher than previously expected. So straight away, the initial expectations was that the Federal Reserve, or the Feds, would be increasing rates to a target level of 5%. Okay, you can see here now we're at 4%. So the expectation was in December, another 50 basis points increase. Into next year, 25 will hit 5%. With the statement there saying that the ultimate rate or the target rate could be higher than expected, this gives the market the view that the Federal Reserve could continue increasing rates, right? Could continue increasing rates, possibly even quite aggressively. If the US increases rates, that's going to cause more demand onto the US dollar. That's why we saw the US dollar or the dollar index shoot upwards almost immediately when that line was being said during the press conference. It shot up from pretty much from that 110.43 level up consistently, steadily towards, firstly towards that 112 round number. All right, it went up towards 112 on a round number, and then through today, you can see that it's been climbing steadily. Right now, almost approaching that 113 round number. Okay, so very steady climb because a increase or higher terminal rate is very hawkish or very positive for the US dollar, and that's why we're seeing this push towards upside. So what happens here is that back to the H4 time frame, at this point right now, it is approaching that 113 level. And if I showed you a line here, you can see that at about 113, the last time it came, it hit 113, it dropped back down towards about 112, and then bounced back up and finally hit that 113.95 level before turning back down quite strongly. Okay, so 113, if I drag this line right across, you can see it's a very strong level. It's been testing many times. It's tried to break back up. It's reversed back again. Even if you look back all the way across, it's a key level to be decided. So what we're looking for here is or anticipation is for the US dollar or the dollar index to continue trading higher. If it does break above 113, then we could see price rise up towards that 113.95 or almost that 114 resistance level, right? The next key resistance level. I don't think that in this scenario, we will see 114.77 in a hurry. I don't think we'll see that very quickly. We saw that in September. I don't think we'll rush there. What I'm anticipating is that we could see price break above, move towards 113.95, and then similar to what happened in 21st of October, towards the end of October, and also in the mid of October, it will test that key level and possibly retrace back down again. Right, so we might actually see it test and bounce around these levels here before. I do think that in the longer term, we might see it come up and test that 114.77 level. So overall, still looking at dollar strength being applied. I do think it will break above this level very soon, possibly within this webinar session. We'll see it test and break above, but also remember that it does have a lot of volatility between 113.45 and 113. So we'll see it break above. Don't do anything yet, let it break and then let it see continue. Overall, how I use the dollar index, I look at it more as a bit of a guide. If we do see it break above, then I'll look into the other currency pairs to help me or to guide me towards triggering a possible move against or following that dollar strength. Okay, so what I mean by that is, again, now if we look at the Aussie dollar, all right, I'll clear out some of these lines. I've been putting all that, right? Aussie dollar tracking strongly lower. What you want to notice here is that the key support level is at 0.62, right? 0.62. Right now, it's at 0.6283. Right now, it's at 0.6283 or 84. What I'm looking for, again, you can see that the last time it came towards this point of 0.6271, it tested, hit, and bounced back up. I don't think in this scenario we will see it test and bounce back up. I think we're going to see it come towards this level. And if we do see that dollar strength continue, then we're likely to see this continue trading towards that 0.62 support level. Okay, so what I'm looking for here is dollar strength to continue to break above that resistance, like you're saying there. And then I'll be looking for a selling opportunity as it breaks below 6271. About, say about 62, no, about there, 6263. Okay, a tight stop loss because it's breaking a support level. You can afford to have a relatively tight stop loss, about 20 to 30 pips, take profit about 60 pips. You're looking at a 1:2 risk reward ratio towards the downside on the Aussie dollar. Right, relatively straightforward there on the Aussie dollar. Actually, relatively straightforward for most of the currency pairs for the next couple of days, especially if we do see that dollar strength continue on. So watch out what happens at 6270. If it breaks below that point, I'll be looking to sell it down towards 6200. With that said, looking at the Kiwi dollar next. All right, Kiwi dollar pretty much moving the same as the Aussie dollar, but you can see that if I did this trend line, all right, it's broken, right, it's broken that trend line now, that channel. Okay, it had a channel towards the upside. Let's change that a little bit. Okay, we had a channel towards the upside, and right now it's broken that channel. I like it that it's broken the channel because that could mean that we're going to see further downside, quite similar to what we've seen here back in September and also at the start of October, where we saw a big downward move. So again, quick resistance level there. I like that it's broken that 0.58 or 5799, 0.58 level. So given that it's broken that, the next key level here I have at 0.5, well, actually, let's make it 0.5545, right? 0.5545. I'll be looking to see whether the Kiwi dollar could continue down. This is quite a significant move, right? From this point, quite a significant move. You're looking for almost a 200 pip move towards the downside. I don't believe that it's going to move straight down, right? As much as it happened here in October, I don't believe that it's going to move straight down in this case. I think that there are a few levels to pay attention to, right? Which levels in particular? If we looked at the Fibonacci levels, okay, what you notice is that it's approaching that 50%. That's fine. But the next key level I want to pay attention to is right there at that 61.8 fib level. Okay, so what you could be doing is, if you did get into a sell, look for it to drop down towards that 5670 level, right? Drop down towards that 5670 level. That's about 70 pips towards the downside, right? My stop loss would be a bit tighter, about 50 pips. So you're looking at 1:1.5 risk reward ratio towards the downside there. You could even have it even tighter at about 30, 1:2, because I have that 38.2 fib level almost protecting that stop loss there. Okay. So we're looking for that downward move towards that 5670 level. If it does break beyond that point, then take profit could be lower. I would move my stop loss to break even or to a positive note just to protect my trade in that sense. Okay, so still, again, relatively straightforward. One key level at 61.8. The next key level a little bit here at, you can see that tail there, that 78.6 level. But I would say if it does break below 61.8, might be a good move already. 78.6 will be the second level. A little bit of a hesitation, but not as much as 61.8. Okay, so still looking for that downward move there on the Kiwi dollar. With that, then let me just move this a little bit just so that we know what we've covered. Right, with that, then the next one I would look at is the US yen. Right, I really like the US yen of how it's been moving, right? Especially the recent move where we saw, where we saw the US dollar weaken, right? That big tail down, that big tail down, it came down to test that 145 or 146 support level, right? Came down, same thing like what happened here on the 27th of October. It came down, test that level, and bounced back up. Big tail towards the downside, test that level, now looking to push back up. A little bit of a waiting game here on the US yen, right? Why do I say that? Is because we do have a bit of a key level here, almost near that 149 level. Okay, so a key level here at almost 149. You can see that towards the end of October, start of November, has hit that level and turned back down. So I wouldn't get into a trade right now on the US yen unless the dollar index continues to strengthen, right? Continues to strengthen, and for price to push above that 149 level, right? I'll take that away for now. And these lines, right? So I'll be waiting for price to break above for that upward move. Then you could be looking for that buying opportunity above 149. First, take profit. You could put your take profit all the way to the top at 150, or you could go for that kind of trade, right? So about a 45 pip stop loss, about a 90 pip take profit level towards that 150 level, right? A nice round number level there. A 1:2 risk reward ratio towards the upside there on the US yen. Okay. Take it a little bit differently, a different perspective here on the US yen is what happens if price does go up, test that level, and start turning back down, similar to what happened here. Okay, so because of that, you can have a little bit of flexibility. What it could mean is that we might even see a bit of an intervention from the Bank of Japan. We might see, on the flip side, if the dollar retraces or weakens a little bit, you can see the US yen trace back down. So what you could be looking for here will be a selling opportunity. Similar to what happened here on the 1st of November, almost similar price level at 148.40. Stop loss, very tight, right? Very tight at about 50 pips. Take profit, you could do it at about 130. I wouldn't put it at 230. I think that although it can get there, you know, we've seen that hesitation here. We've seen a bit of a level there. So I would say my take profit about 128. Yeah, looking at a 1:2.5 risk reward ratio towards the downside there on the US yen. All right. So a little bit of a, if it does go up, if it breaks above the resistance, look to buy. If it breaks below or reverses from the resistance, look to sell. On the US yen, I think that flexibility is quite important and quite useful here on the US yen. Question is now, can it break above 150? Can it break above 150? Quite possibly, but that would mean that we're going to have to see a very significant strength in the dollar index. Again, coming back to the dollar index now, will mean that we probably have to see it break above that 113.95 or 114 level and climb towards that 114.77. All right. So like you mentioned there, you can see that it's approaching that level. Now we're going to see whether it can break that level. All right. So that's the US yen testing that 148.80 level, key level. Let's see what happens there either side, there is possibly a trade opportunity. So remember again, right, we've gone through 3 charts now and I've identified 4 trading opportunities already, right? A buy or a sell on the US yen, selling opportunities on the dollar, on the Aussie dollar, selling opportunities on the Kiwi dollar. Again, remember, don't try to enter all the trades unless you have a massive account, then fine, go for it. But if you don't, then don't enter all the trades. Do a pick and choose. Make sure you're not over trading, not over leveraging on your account. All right. So it's not a case where you want to jump into all the trades, because that could very likely be a disastrous scenario. All right. So with that, then let's look at the euro dollar next. Euro dollar has been moving very nicely towards the downside. Take those. Let's clear out the charts first. You can see that the next key level we have is at about that 96 or 9670, right? If I zoomed out a little bit more, you can see beyond that, we do have about 9550. Right now, it's interesting. Why I say it's really interesting is because it has just broken below that 0.9755, or looks like it's going to break below that 0.9755 support level. Could turn into a resistance level if it does break. So what I'll be looking for here as it tries to break that support level, again, this is on H4 time frame. So a break would mean that when price closes below that level, I'll be looking for a selling opportunity towards the downside. Again, very tight stop loss here, about 30 pips. Take profit, you could go straight away to about 70, 60 something. So 1:2 risk reward ratio towards the downside there on the euro dollar. Okay. I would not try to go for that whole move first. I would say, let's see, first trade, if it breaks, can it get to that 9670 level? And after that, if it does break that point, I'm not sure whether it will break entirely, because you can see that it's bounced off this level a couple of times already. So if it does break that level, then I would say next trade towards the downside, right? About a 30 pip stop loss. Take profit again, about 90 pips. In this case, a 1:3 risk reward ratio towards the downside on the euro dollar. Okay. What happens if we see the dollar weaken? All right. What happens if we see the dollar weaken? Again, this could push back up if it fails to break, or if it does come down towards the level and bounce back up. It's actually approaching that point right now. So if you remember, again, if you do jump into any trades, do your own due diligence, make sure you're not over trading. Okay, so far, any questions? All good? Let me know. Put it into the chat. Are you okay? Hey, Teddy, how are you doing? Alrighty. Okay, so moving on from that, we'll look into the pound. No, I'll look into the US Swiss franc first. Thanks, Bondface. All right. I'll look into the US Swiss franc first. Why so? I'll tell you shortly. Look at that. Okay, look at that push up. Why it's pushing up is because of the dollar index pushing up. We've seen the US Swiss franc with the news today. Okay, Swiss franc CPI data was a minus 0.2%. Expected a 0.2, got released at a 0.1. This shows that inflation in the Swiss is possibly slowing down a little bit. So that shows, might be a good news in the overall scheme of things. But what we've seen now on the Swiss franc is the volatility in the Swiss franc is driven a lot by the dollar index more so than the Swiss franc itself. Okay, a good question there from Joachim is, which time frame is better while entering a trade? I'll tell you that what I do is that for me, I look at the charts on the first on the H4 time frame. All right, I do my charts first on H4, like I'm sharing with you here. I would do on H4, I'll identify my key levels, such as the support level there. I'll identify a key level here, such as that resistance level. All right, and then possibly anywhere in between, but for now I'm happy. And then I'll identify, if this breaks above, where could it go? So I'll zoom out. That we don't have any levels. Go to the daily time frame. You can see that the next ultimate key level is at 1.023. Okay, so those are my levels there. And knowing those levels, I'll zoom in again. Right, in this case, I would say I'll wait for the H4 to go up and break above that point to look to buy it up. If I'm not looking at the H4, or if I don't have the time to look at the H4, then I'll go into the H1 time frame to see whether price could, for example, in the next 30 minutes, push above to break above that point and then look to buy it up. I would suggest to most traders is that you should stay on the H4 and H1 time frame. I do know that there is a tendency or an attraction to trade, the smaller time frames, the M15 or M1. Those is tradable. Those are tradable, but it's going to be a lot more emotional. You're going to see a lot more noise, right? Why do I say that you're going to see a lot more noise? If you look at it on the M1 time frame, you can see that it looks like it's starting to retrace back down, right? It looks like it's starting to retrace back down a little bit. If you're not super keen or not super on the ball with your analysis, you might think that, oh, wait, can I look to sell it from here? And then think that you're going to put a resistance level and a take profit towards the downside. Okay. But you'll be ignoring that overall, that big upward trend. Even more recently, we have that channel towards the upside, that channel towards the upside there. So you get caught. You get caught if you do it into the time frame which is too small. So what I would suggest is H4. Do your support and resistance lines on H4. Identify the trend, right? Look for where prices could be heading, key levels to pay attention to. And then if you can do it on H4, fantastic. For example, in this scenario here, right? If we see it test and bounce, great, caught the move. You could be looking, in this case, a long opportunity, take profit towards the next resistance, stop loss below the support. That'd be a great trade. You would close out halfway towards the upside. But if you're not looking at the H4, you can't catch that move right at that point, then look at it onto the H1 time frame. All right. So ultimately, it's down to what time frames to trade on. Is really down to experience level. It's down to what you're comfortable with. It's down to how much time you're going to spend sitting there watching the charts and trading on the charts. Okay, I hope I answered your question there, Joachim, in terms of what time frame is better for entering a trade. I would stick to the H1 or the H4 time frame. So back to the analysis here, US Swiss franc, I was just sharing with you already. If it does break above that 1.0148 or 1.15 level, right, you could be looking at further upside towards the 1.0232 level. This will, again, I'm sounding like a broken record here, but this could again, or is again, dependent on that dollar strength, right? If the dollar continues to strengthen, then we're going to see this move continue pushing higher then you'll be looking for that upside move, right? A good 60 pip move towards the upside. Stop loss can be very tight here, about 30 pips, a 1:2 risk reward ratio towards the upside there on the US Swiss franc. I do think, or I'm looking at a possible, again, back to the dollar index, testing that level. I do have in mind that, things can't move straight up all the time. There should be some level of a retracement. So we might see a bit of a retracement or consolidation at this 113 level. And if we do see that, then again, checking out the US Swiss franc, it could be, or could we possibly see a rejection of this 1.015 level to turn down? Quite similar to what we saw here on the 21st of October, a test and a turn towards the downside. All right, so if I zoomed out or I shifted the chart across, the US Swiss franc does seem to have that tendency to form a bit of a double top formation. All right, you can see here one top, another top forming right across that resistance level there. Good strong double top to turn towards a downside. So coming back here again, right? Could we see a possible double top? Right, one, a bit of a tail, and then if it tests and rejects, then we could see another with that horizontal resistance there. Could we see also a move towards the downside on the US Swiss franc? Bit of a chart pattern set up here, but don't use just one method alone. If we do see that strength on the dollar index, then the double top formation is not likely to form. I think I have another double top formation here on the daily time frame. Nope, that's it. I think that was a double top there. Oh, there we go. So you can see that the US Swiss franc does seem to always have a double top and a big reversal towards the downside. But right now we're looking at, oh, here we go. This is the one. So we had that double top, and then we have another one here, right, forming a good level. And then that's why we saw that push towards the downside. Okay, so could it happen again? Maybe, but I think that possibly the strength of the dollar index might be a little bit too strong, resulting in not a non-formation of the double top pattern. Okay, so the next one, the US CAD, clear that out a little bit. Okay, the US CAD formed a strong support level at about that 1.3520 level, bounced, tested a few times, came very close last night. A key resistance level there at about 1.3825, and then the ultimate level there at that 1.39, almost 1.3950 level. Okay, so again, it sounds a little bit boring right now, but again, we are waiting to see whether that dollar strength is going to come back in. I'm not sure whether the retracement is going to happen right now or during this session, so I'm hoping it does, but might take a little bit longer. Remember, this is on H4 time frame. Okay, so I'm looking to see whether this is going to come up, hit that level, and turn back down with dollar weakness, or more likely we're going to see it break above this point and push higher, right? So if I drag that right across, you can see that as recently as in September and in October, we've seen it test that level and turn down. Again, in October, test and turn down. It can break. If it does break strongly above, we could see it climb towards 1.3970. And then again, it failed to break there. So what I would be doing, again, if you are looking at a H4 time frame, you might not have the time to sit there and watch. What you could do is use pending orders as well, right? A buy limit, a buy stop. You could have above that 1.38 level, you could be towards the next resistance level. Stop loss at about 30 pip thereabouts. You're looking at a 1:3 risk-reward ratio towards the upside. Put the plan, have a buying pending order there, and then you'll be looking at the push towards the upside. Okay, is this a strategy that I usually use, or do I have other ones? This is a strategy that I use. So how I trade, I look at the news. I always look at the news first. With the news, it will give me that overall direction of where I think price could be heading. Then after that, I'll look into the charts using together with the news or the economics. If it's dollar strength, I'll be looking for it to push. I do prefer to enter trend following trades, right? I do prefer to enter trend following trades. So if it does reverse, this would be in the range, so it'll be okay. But I wouldn't be looking for trades like, for example, here to be selling it back down. Okay, so I do look for trend following trades, breakout trades when it breaks above a resistance level to push towards the upside. Good trend, good breakout. Those would be the ones I look for. Okay, so not I don't use a lot of different strategies. I kind of have one that I stick to and apply it on multiple different time frames, multiple different currency pairs, but the same thing over and over again. Okay, so that's, I hope I answered your question there, Boniface. That's my how I look into the markets. So with that said about the US CAD, let's look at this big one. All right, this big one, the pound dollar. Pound dollar, I have been sitting there. I've been trading it down through the day as it was dropping. I'll show it to you on the H1 time frame. Right, a big drop. I hesitated a little bit just before this session because I didn't want to have a trade running as I was doing a webinar. I saw that consolidation, a bit of a support at that consolidation there at 1.1270. Okay. And then I see that break right now. The next key support level is at 1.11, right? 1.11, the next key support level. I would highlight the previous resistance level, drag it right across. It's at about that 1.14, right? Just to make it a bit of a round number there. Oops. 1.14 as a key resistance level. Why am I highlighting these points here, that key resistance and the key support level, is because it's going to get quite interesting on the pound dollar. Again, jumping back to the news at 8:30. So in about an hour's time, right? We do have the Bank of England with the interest rates decision, right? With the Bank of England with the interest rates decision, looking to push official bank rate or interest rates in the UK from a 2.25% to a 3%, right? A 75 basis point rate increase again, quite similar to what happened in the FOMC or the Federal Reserve. Question being now is that if they do increase it, or given that they increase it by 75 basis points, what's going to happen to the pound dollar? Is it going to be similar to the Federal Reserve last night, where they do increase? In a statement, they might say that, you know, they're looking at slowing down further rate increases. Then we're going to see the pound dollar shoot down towards that 1.11 level. Or if they do increase rates and say that they might look at further rate increases, then we could see the pound dollar push up towards that 1.14 resistance level. It's quite sorry. It's quite good that the price now is at this level. I'll move this as a bit of a swing level there. Okay, it's very close to that point of 1.1260. Okay, so what you could be looking for, right, in the lead up to this news event, remember this on the H1 time frame, let me just do that. Oops. Is you could be looking for either, and you could do this as a pending order, above, play a little bit safer, above 1.13, take profit 90 pips, stop loss could be 30. It's not below that support level, but this is a news event. And then a selling opportunity about 1.1215. Now I'll be a little bit safer below 1.12. Again, stop loss about 30 pips, take profit about 90 pips. You're looking at almost 1:3 risk reward ratio towards the downside. Okay, so you can see that in this case, you're not likely to rush into a trade onto the pound dollar. You can have a pending orders. You're not likely to get slipped because it's quite far away. So you can be looking for that buying opportunity or that selling opportunity, almost a 1:3 risk reward ratio on either side. Okay, so that's the pound dollar. You can see that if it bounces from this level, we can see that push quite similar here. If it tries to break, fails to break, we can see that push towards the upside, or if it breaks towards the downside here. What I'll do is I'll show you here the last time, right? In September 22nd, the last time they increased, the Bank of England increased interest rates also by a 50, at this point, by a 50 basis points, right? So 1.75 to 2 and 2.25. So it's 50 basis point rate increase. What we saw here on the 22nd of September. Let's find it. Okay, there we go. So on the 22nd of September at the, there you go. At the news there, 8 o'clock. There. Okay, you can see that on release of the news, 8 p.m. Yeah. Okay, on release of the news, there, not a lot of things happened, but then after that, following on, we did see the pound dollar trade lower. How much lower in this case? We actually saw it drop by about 87 pips towards the downside, right? 87 pips towards the downside on the pound dollar. So could it happen the same in this case? That was a 50 basis point rate hike. That's why we saw this push down. Right now, we're looking at the possibility of a 75 basis point rate hike. Could we see this push down, similar to what happened on the 22nd? Or could we see a hawkish Bank of England a rate hike to push this towards the upside again? All right. So something to watch out for happening in about an hour's time. So that's the news from the Bank of England with the interest rates decision. One more thing I want to share with you as well is into tomorrow. Tomorrow, first Friday of the month, 4th of November, we do have the US US non-farm payroll, NFP, employment data to be released. It was a 263, expected 205. Unemployment rate looking to go from a 3.5 to a 3.6, slight increase in unemployment, but you can see here that it was a 3.7, expected 3.7, it actually dropped a little bit. So this might just be averaging out a little bit, okay? So I don't think that's going to change too much. The non-farm employment number has been very positive for a long time. You can see that through 2022, we've seen very good news from the non-farm payroll. Again, we might see this continue on. And if we do see a strong employment change number from the US, if we do see not much changes in terms of the unemployment rate, and average hourly earnings stays at that 0.3%, then we could see again on Friday further dollar strength being applied. right? For the dollar strength being applied, and that would apply right across the board. Okay, so that's one thing to pay attention to with the non-farm payrolls to be due tomorrow at 8:30 p.m. So right now you can see that the pound dollar suffering a little bit, dropping, hitting that level, but it's possibly going to sit there until the news in 1 hour's time before we see that break either to the upside or downside. With that said, I'll look into the last chart here with you guys is gold, right? I've been trading gold towards the downside as well. You can see that that volatility was because of the dollar index, the FOMC interest rates decision, and then it's trading lower. Right now, it's came towards that 1620 level. If I zoomed right out, you can see that the last time it broke below 1620, it was at about 1615, right? At 1615, before we saw the big bounce. Again, at 1620, we saw a big bounce. Right now, the momentum seems to be really strong, pushing it down. So I'll be watching to see. I think that is likely to break 1620 to move down towards 1615. Beyond 1615, be extra careful, because if I went to the daily time frame, you can see that it's been a long time since we broke 1615. This was back in 2020. All right, so if it does break below, we can go lower, but just be extra careful. You're going to see a lot of volatility beyond that 1615 support level. When the unemployment rate increases, how does it affect the market? Well, if the unemployment rate increases in this example here, or this scenario here, it should weaken the currency. But when you pair it up, if we do have a strong employment change, more people working, and also unemployment rate maybe climbing up a little bit, then it's not going to affect it so much, because it does take time to fill jobs. There's more people looking for work. That's possibly a good thing, and more people working, also a good thing. So that's also one reason why I haven't harped on too much about the unemployment rate, because usually it should weaken the currency. But I think in this case, if it does get to a 3.6, not likely to have a major or a significant impact on the US dollar. I think that the major number there will be the non-farm employment change number, but overall it's still the current trend, the current sentiment that we're seeing there on the dollar index. Okay, and you can see the dollar index approaching that 1.113 level, consolidating, testing that level a little bit. So let's see what happens there. All right. So with that said, any further questions? I hope you've got good information, got good tips and ideas about the markets through this webinar. All good? All right. You're most welcome there. Okay, so if you got no further questions, what I'll do is I'll go and end today's session. Remember, we do have a big news to be released on the pound in about an hour's time. So make sure you prepare for that if you're trading, or watch out for that if you're trading. If you're not, then stay away until after the news before jumping in. And also with the non-farm payrolls tomorrow, possibly another high volatility event. With that said, trade well, trade safe, and I'll see you again. Take care now. Bye-bye.
Hello everybody and welcome to another one of our great videos. Today we'll be looking at how to practice discipline in trading. Discipline is a necessary and important part of any trading strategy. Without discipline, a solid trading system and proper risk management lose their value. Self-discipline involves developing a mental framework which enables you to stay motivated and focused. You should have a target or goal in the mind, as this is the first step towards developing self-discipline. Discipline can be mastered and all you need is willpower. This involves carefully studying the markets and especially the markets you're trading. In order to acquire discipline, you must practice patience and be able to control common emotional impulses like fear and greed. Proper discipline involves having and sticking to a trading plan. Create a schedule for your trading. Know what signals will make you enter or exit a trade. You create trading rules to get you out of trouble when positions go badly. If you don't follow the rules, you've lost your discipline and allowing for even greater losses. Ensure that you apply proper risk management by sticking to your stop loss and take profit orders. If you stick to the rules, you will discover that discipline is necessary for success. Thank you for watching.
Hello, hey guys, hi. Hey. Hi Arun, hi Juha. Hey, hello Namdi, hello Ronald, hello Stephen, and hi to the rest. Hey, thank you very much for joining today on another IronFX webinar series. Hey, give it a moment for the others to join before we begin this webinar. Okay, give it a moment. Okay. Okay, let us begin. Okay, welcome. There are more people joining. Thank you very much. Hey, let me know where you guys are tuning in from. Where are you guys from? Well, for me, I'm from Singapore. It's around, okay, it's 6 p.m. right now. 6 p.m. Oh, Nigeria, Finland, UK. Very, very nice. Wow, all over the world. Belgium. Wow, all these places. I got to go there one day. Okay, nice. Let us begin. Okay, today will be very, very technical. Very technical on the multiple pivot point strategies. There are quite a few that I would like to share with you. So let us begin. Okay, as usual with the introduction, my name is Chen Yongjing, and I am the investment analyst for Everest Fortune Group. So we are also the finalists for the best Forex research for 2019, 2020, and 2021. We also the finalists for the best equity research for 2020 and 2021. Okay, a disclaimer first, all trading involves risk. It is possible to lose all of your capital. And the agenda for today. What are pivot points? The different types of pivot points, and what time frame should you use for pivot points? Also, we will be teaching how to add them into your strategy. So later I can ask you guys what kind of strategy you guys use, then I can see what kind of ways we can implement it into your strategy. Okay, my hair is a bit messy. Do apologize for that. Okay, what are pivot points? Okay, a pivot point is like, let's say the chart, up, down, up, down. So where are the pivot points? A very simple pivot point is the top and the bottom of the low and the high. So you can call it as the previous high or the previous low. Okay, a pivot point is an intraday technical indicator used to identify trends and reversals mainly in equities, commodities, and the forex markets. So all these reversals, what I like to do, I personally use something very similar to pivots. So with this, the high and the low, I like to catch that reversal back in. But of course, with some confirmation. So maybe later I can share on how I do that. Okay, pivot points are also calculated to determine levels in which the sentiment of the market could change from bullish to bearish, vice versa. Okay, the high, just take note, the high, it indicates the highest price from the prior trading day. Hey, I see more of you guys sleeping in. Hi, April. Hi, Ayman. Hello, welcome to the webinar. Okay, as I was saying, the high, hey, hello. Hi, man. Okay, as I was saying, the high indicates the highest price from the prior trading day. The low indicates the lowest price from the prior trading day. Okay, the day traders calculate pivot points to determine levels of entry, stops, and profit taking. Later, I'll be turning on trading view. So I'll show you guys the pivots, the multiple pivots. I think I'll be presenting for today. Hey, good to be here. Yes. Lucky you are here. Welcome. Annie Chukwa Kingsley. Okay, I'll be presenting today 4 different types of pivot points. The standard ones, which are the most basic ones, the Camarilla pivot points, which I think I like it. I like this pivot quite a lot. And the Fibonacci pivot points and the Woody's pivot points. So all these are just improved versions of pivot points. So the first pivot point, this one, the Camarilla pivot points. Okay, it's actually refined form of existing classic pivot points formula developed by Nick Stott, and it's a better use of Fibonacci numbers in the calculations of levels. It's also used to calculate intraday support and resistance levels. Okay, let me open it up. Let me open the charts before we begin. Okay, just to let you guys know, also we have an IronFX YouTube channel where you can watch the live TV and the past playlist. You can take a look. You can learn quite a lot of things right here on the IronFX YouTube channel. I'll just paste it over into the chat to everyone. Okay, we start with the traditional pivots first. Okay, traditional pivots is actually, it looks very confusing. There are multiple resistance 2, 1, 2, 3, 4, 5. Support 1, 2, 3, 4, 5. So it's in a way, it's very, very similar to how a Fibonacci works. So if you take a look, if I turn it off, how a Fibonacci works, can from the top all the way there. So it looks very similar. If I turn it on, you see some lines coinciding, especially this area. So it's in a way you can actually trade similarly to how you use a Fibonacci from one area to another area. Okay, this is just the traditional one. You can actually find it in the indicators under pivots. So you can actually get the pivots point standard. Okay, what was the one that I was going to present is the Camarilla pivot points. Okay, let me move the screen a bit so I can see everybody. Oh, more people are joining. Hey, welcome, man. Welcome, Hanin. I just saw you sleeping in. Okay, so we are on this. Okay, so for resistance, for these pivot points, for this pivot, the karma, let me type it out. Okay, excuse my pronunciation. Karma, Vira. Pivots, points. Okay, so with this, we have the supports 1, support 2, supports 1, support 2, support 3, support 4. Okay, you said that the email said start time was 10 a.m. GMT. Yes, it's right now it's 10 a.m. GMT. It's 6 p.m. Well, for my timing, it's 6 p.m. GMT plus 8. So it's slightly different. No, it's 11 a.m. I think, can you please, Stephen, can you please say what you meant against? I think I'm a bit confused at your statement. Okay, it's at Mr. Camarilla pivot point. Okay, so we also have the resistance 1, resistance 2, 3, and 4. So what I like about this is I actually noticed that you can actually backtest. With backtest, you can buy from the resistance, you can buy from the support and with the stop loss below. So example like this. Okay, now is 11 a.m. Email said it will start at 10 a.m. Okay. I'm not sure about that. I think it might have been the IronFX email site issue. GMT timing, just let me clear this up. Now it's 11 a.m. GM email said it will start at 10 a.m. Well, I think it's the GMT plus 0. Do you mean that, Stephen? Okay, give me a moment. Okay, let us continue. I think I'll get back to you regarding that again later on. Okay, so yesterday I was actually in a EU shorts. Oh, you are in summertime. Okay. I think I'm a bit confused on the timing too. Later I'll check it out. Okay, so what do we have? Give me a moment. Okay, so we have this area. You can see this area. This is the support 2. It bounced up and it actually coincides with an area where I was actually trading yesterday. So I was actually in a short. I was in a short over here, somewhere here, with my take profits 1 here and take profit 2 at this candle right here. But my final take profit didn't got hit. Well, it's fine. Later I'll explain this trade out also. So I actually like this pivot point a lot, this Camarilla pivot point. So you can see on as soon as the what do you call it, the supports for, this is the supports for the previous day, or the resistance for that it gets broken, you normally trade with the trend. So when price goes below it, they continue selling downwards or upwards. So this one, it's the support for that is broken. Let me make it smaller a bit. Okay, let's take a look at old data for some back testing. So you can see here, resistance 4 broken, price continues going upwards. So I'm sure you guys are thinking right now, why not I set a buy stop here, a buy stop with my stop loss at at the bottom, maybe here, at resistance 3 for price to continue going upwards. Isn't it possible? Please, audio echoing. Okay, let me test the mic. Hi, mic tests. I think someone is having issues. Can you hear me clearly? Can you guys hear me clearly? Where will this recording be uploaded? Not here, all clear, no audio issue. Okay, this audio recording, they might upload to the IronFX YouTube channel. They might. So I remembered I saw my, let me take a look. Okay, all clear. So I think for you, for audio Kyun, it might be your speaker issue, or you might want to use a earpiece regarding this echoing issue that you might have. So they okay, no problem. Hey, thank you. Okay, nice. Let us continue. Okay, so they might actually upload it on YouTube. I saw my previous live trading analysis was uploaded online too. So it might take a few days, give them some time to upload. So let me clear these things out. Okay. So some of you guys are thinking probably I can set a short position right here. Upon breaking the support 4, my stop loss to be safe, I can set it at the supports 1 and let price continue downwards with at least, as usual, a minimum of 1-to-1 risk to reward. Minimum 1-to-1. Never go lower than that. You will be, especially 0.8. All this, just ignore. Do not take a trade. So we can see, let us see by the end of this session where price on the euro dollar might be heading to, since it has already broken the supports for pivots. So for this, right, coming back here, just now the back test, to have a safe, very safe one, we have our stop loss at the first resistance, the red line. Wow, even more people are joining. Wow, we have quite a lot of people today. Okay, let us move on here too. Okay, this is a scenario that it did not work out well. So you're taking a short. You're taking a short. Let's say you take a short here, a stop short. Okay, it's not here. Okay, it's here. This scenario did not work out. So with your stop loss there, and then the maximum it even went was in a negative risk to reward before price reversed all the way up. So you cannot just trade solely based on one indicator, especially the pivot indicator. It's best to combine multiple forms of indicators or your own trading methods before you enter a trade. This is a very good example of a beginner mistake. If you actually enter it right here, and then it just hits your stop loss, although you have a fairly wide stop loss. So let's continue. Okay, another area is here. Price goes up, maximum it did when, okay, at least nice, it was a 1-to-1 right here, at least. So always, I have a question, do you use the automatic trading? Answer live. Okay, you were asking you want to do this automatic trading. You want to use this automatic trading? No, I actually don't use automatic trading. I use something called, this is my personal trading method, Smart Money Concepts. Just send it out into chats. So I usually use that, Hanin. I use Smart Money Concepts as a confirmation together with market imbalance. I stress that a lot, especially the amount of risk that I'm using. I only risk 1% per trade. So I don't go for those 5% trades where after, so let's say you risk 5% per trade. It takes you 20 losing trades to actually blow your entire account. With 1%, it gives me more time to cover back if I'm in a loss. And it actually takes 100 trades before you blow your account. So if you actually blow your account risking 1%, I think you need to rethink your decision on trading or to just take a step back and start to study more. Okay, I'm not seeing. Okay, nice. Okay, here is another example of how it didn't work out. I'm just showing you guys things that don't work out and how it works out, just in case you guys decide to just do a stop, just follow using the indicator and then it hits your stop loss. So this is another scenario where it didn't work out. Always look to the left of the charts, especially here. Do you have a robot? No, I do not use a robot. I don't trade using a robot. I trade using a naked chart, actually. A naked chart. So what do I mean by a naked chart? I do not use any indicators when I am trading. Later, I will open up my personal chart layout. You can see. So I actually have my personal chart layout right here, where I'll show you later. There's 0 indicators involved. Okay, moving up. So you can actually see the win rate just following this. Camarilla pivot point is not that accurate. People can actually reverse price actually for this scenario, price reverse. This scenario, price reverse. For this, price went kind of right before it's reversed. Okay, this is another scenario. It didn't work out. The overall trend is bearish. But then this area broke. You try to short. You try to short. Okay, it worked quite well. This is working well. The stop loss there. It's very wide. You get a 1-to-1, but it took quite long. I don't like holding trades for a long period of time. So how long did it take to even hit a 1-to-1? Wow, this is a very, very long trade if you're actually in it. Wow, it took 3 days, 13 hours just by using a sell stop, man. That's very, very long. Same thing with this. Wow. It took very, very long for a 1-to-1 trade. Okay, just in summary, don't just use a sell stop. Use some kind of confirmation before you enter, and also to minimize your risk to reward. Okay, this took 1 day, 2 hours. It's quite long, man. Okay, let's move on to the others. Let's carry on with the presentation. Okay, next we have the Fibonacci. Okay, there's one more person with a question. Do you have a group to do smart money concepts together? Let me answer this live. Okay, do you have a group to do the smart money concepts together? Unfortunately, no. Actually, I don't. I learn it online, and then I have friends in real life who I actually discuss smart money concepts with, and then he's actually better than me at smart money concepts at the time of my learning. So I guess it's working pretty well. The concepts are pretty okay to understand, pretty easy to understand for me compared to other methods. What method do you use, Hanin? What method do you use for trading? Hey guys, just send into the chat what methods do you use for trading. I'm quite interested since we have quite a lot of people. The diversity of trading methods should be a lot. Regardless whether you guys are new to trading or price action. Akuma, you use price action. So do you trade like, do you know who is Raja Banks? Do you trade like him? Okay, next we have the Fibonacci pivot points. It incorporates the Fibonacci levels into their calculations is pretty much accurate, and they find the support and resistance levels. Okay, so the calculation is quite complicated. So I actually wanted to add it into the slide, but then it's already in an indicator, it's automated. So you guys do not actually have to know how this entire, all the pivot points that I was covering, how it's calculated. It's fine, it's not needed. Okay, I think somebody is asking another question. Okay, Hanin, you are asking about money management. What do you mean about money management? Do you mean risk management? Do share it into the chat. I can help to answer your question regarding that. Okay, risk management. I'll just do a quick one. So hopefully the others can benefit on that too. So let me clear this out. Let me take an eraser to clear this out. Is it not clearing? Forget it. Okay, so I risk 1% of my accounts. I only risk 1%. So let's put it into very, very simple terms. Extremely, extremely simple. So I have $100 in my account. Okay, maybe 1,000. So per trade, I only risk 1% of 1,000 times 1%. So every time I lose, let's say I lose the trade, hit my stop loss, I only lose $10. But if I have a risk to reward of 2 to 1, I'll get 2%, which is equals to $20 profits. So how do you calculate your lot size? How do I calculate the lot size for the 1%? So let's say I'll just draw it out. This is how a trading view looks like. So we have the stop loss level, the SL, the take profit area. So the SL, let's say we have a stop loss of 9 pips. 9 pips. But then including commission plus commission is equals to 10 pips. So we just take our $10 divided by 10 is equals to 1. And then you take your 1 and divide by 10. So you get your lot size. So your risk amount divided by the pips you are risking, and then divide by 10 one more time. This is just a manual calculation. Okay, let's move on to the Fibonacci one, the Fibonacci thing that we are talking about. So have I answered your question, Hanin? Okay, the pivot points levels are determined by calculating the pivot in the standard method. We have the calculation method is pretty complicated. I'll not get right into it. Okay, and why people like to use Fibonacci is because many traders use the Fibonacci ratios. They use it for retracements and as a place of where they would like to close their trade or take profit at Fibonacci levels. So I also like to use Fibonacci to determine to add confluence. Confluence, let me write it out in case my pronunciation is not that good. So to add confluence to my trade, I like to use Fibonacci. So I also look to the left of the chart, left to the chart, as in there must always be a reason on why there is a take profit area. Okay, okay, I'm not sure how to pronounce your name. I do apologize for that. Okay, you say you are a beginner. So I don't understand anything in day trading. Is this course okay for me, or should I skip this course? Do stay around to listen. I can actually show you some methods where you can increase your chance of to have a better chance of a winning trade, I'll just simplify it down. Later, I'll show maybe some form of smart money concepts, a very, very simple one later on. How I take it, and I only take that kind of trade. Okay, next we have the Woody's pivot points. So it has a greater weighting on recent price data, very similar to the EMA, and it's used for intraday trading. So for Woody's pivot points, they are made up of multiple key levels calculated from past points. The key levels include the pivot point itself and multiple supports and resistance levels. So traders actually use these levels as a guide for future price movements when setting up trades. The calculation for the Woody pivot points differs from other pivots because it places a greater weighting on recent price data than the other variations. Okay, it's also widely believed that the high and low prices are results of emotions in the heat of the battle, while the opening and closing prices are a more accurate representation of the mood of the markets. Okay, let's move on. I can open the chart again to present the Woody's pivot points. Okay, I think it might be this. Okay, we have the, okay, my screen has all these lines. How do I remove it? Can you guys actually see the blue lines on the screen? Can you guys see it, or is it only me? Do let me know all these blue lines that I'm actually looking at. There are some lines on the screen. You guys see all these lines right here? Oh, damn. Okay. I think it might be something to do with the drawings. Oh, wow. I got to... Okay, I found it. Oh, yes. Nice, nice. Okay. Found a way to clear it. Hey, thank you for confirming that. Okay, for Woody's pivot lines, just like the PowerPoints. Okay. They like to sell. Where are they selling? They're selling at the first resistance downwards, or they long it from the second support or the first support. My personal thoughts about all this, about entering like that, just by entering, oh, I have a buy limit set here, buy limit set here, stop loss below, buy limit. The thing is, I take it as it's some kind of gambling. I'll take it as this gambling, because if you just set your buy stop or your sell limit just at this level, along this level, waiting for price to go down, you are not adding confluence. What you want is multiple confluences to the left side of the charts, or multiple like confirmations that this trade might go in your direction, instead of just setting a buy limit, sell limit. I wouldn't do that. Okay, Woody's pivot points. Get to the chart. Okay, let's take a look. Since Woody's pivot points are for the intraday traders. Okay, no issue, continue class. Okay, sure. Okay, you can take a look right here. So, you have a short position. Stop loss at the second resistance. This is using the Woody's. I'll just write out Woody's points. Make it larger a bit. Okay, maybe 20. It's too small. 40. Okay, Woody pivot points as usual. 1-to-1 risk to reward. So you're just trading zone to zone, just like a Fibonacci. Zone to zone. The first support and the first resistance. Also, later I'll show you guys how I enter using smart money concepts, a possible way that we can implement it together. Or if you guys have any methods that you guys are currently using and that I might know, do send it over in chats. I might try to implement it in. So same thing here. People try to long. Let's say you long it here. Your stop loss must be a considerable area. It's up to you where you want to set. So if you set it right here, your stop loss hits. But let's say in a scenario where you set your stop loss lower, can you show how to calculate the pivot points? We are actually using an indicator. I'm not calculating the pivot points, so you can actually search it up. The indicator that I currently use is by Chris Waters. And it's under indicators. We do not calculate the pivot points ourselves. If you like to know the calculation, I actually want to add it to chart, added it to the PowerPoints, but I thought about it. I think it's too technical and it's something that majority of people won't be using. They won't be calculating. They'll just see it and they will forget about it. Since it's already in an indicator, so I guess the calculation is not needed. Okay, but thank you for asking, Ronel Ramos. Okay, so the indicator that I currently am using is pivot points by Chris Waters. So this indicator is actually quite good because in the settings, we can show the floor pivots. This pivot I'm not presenting. So we are showing the Woody pivots, the Fibonacci pivots, and the Camarilla pivots. So it's like an all-in-one indicator. So same thing with let's say in a situation where our stop loss wasn't hit. Let's say we set it right here, stop loss right here. In such a situation, we still want a one-to-one risk to reward. Okay, this was pretty good to the next resistance, 1.16. By something I would not like to do. I don't like, as usual, I like to say I don't like to hold my trades for. This took 6 hours. I normally like to hold my trade for maybe around 2 hours, 2 to 3 hours, and I'm out. If not within the hour would be best. Okay. Let me show you guys. Do you guys want to know there are formulas for all styles online. Yes, there are many. It's all online, but I'm sure nobody is calculating this by hand, right? Like you wake up in the morning, you decide to calculate the pivot points, start to use all the calculations. So you can actually search online, Camarilla pivot point calculation. So you can see the calculation is so complex. There's so many calculations to do just on that. I don't think anybody will be just calculating, will wake up in the morning, open their chart and calculate, right? You'll be looking at multiple currencies. That's why the indicators are there to automate it. So by the time you calculate all this finish, maybe it takes you 15 minutes to half an hour. By then, you would have wasted your time because I'm sure a few people are looking at maybe 4-6 currencies. So to calculate all these out manually by hand, it will take 2-3 hours. Please don't do that. Just use the indicator. It will save so much of your time. Just open, close, open, close. It's very fast. So do you guys want to see how I enter a trade? So yesterday, I actually took a shot right here. Okay, it's not showing cannot show an example. Maybe I can show a reversal. Okay, let's say I actually took a reversal trade that hit my break even. So let us zoom in on the 5 minutes. What actually happened? So if you guys are actually using smart money concepts, it's actually very, very similar to how a pivot is used, how a pivot is presented. Okay, now we are already in the final parts of adding the pivots into the strategy. So for my personal one, I like to use smart money concepts. So I like to add it in. I like to add this into my trading style. So just now I was saying the high and the lows. So the low and the high, you can see this area, hit, tapped, reverse. This area, tapped and reversed. So yesterday, I actually entered a long. I wouldn't lie to you guys, I entered a long. I entered a long right here. I was hoping for price to continue going up to clear this high. Why did I enter that? What was my confirmation? So I took this area, which is the low of the pivot. So I'll set it as the sell side liquidity. So I saw that area got cleared and price went up even higher. I expected. This is the buy side liquidity, the high side. I'll turn off this first for now. Okay. So when price on the M15 charts, it cleared this high, this small little high right here, using smart money concepts. So I like to call this break of market structure. BMS is called break of market structure. Okay, so moving into the 5 minutes. So I actually use 15 minutes to get the overall grasp, the overall picture of the market, what is going on in the market. So moving on to the 5 minutes, to the 5 minutes chart. So this was the 15-minute high that was broken. Price went up even higher. I tried to implement my personal trading methods. And then what did I spot? I spotted on the 15-minute charts, market imbalance. So you can see this area right here, this area. Price previously did not come into that area. So I was looking for price to come down, tap that area before price continue going upwards to clear this high right here. But I did enter. I entered right here. I entered there. So let me draw out this area. I entered there. Where's my long? With my stop loss at the bottom. And I was looking to the top. So actually to the left, there was something. I already cleared the chart. So all the way to the left side of the chart, there was a point of interest that I was aiming even higher than this specific area. So even for me, I do have my wrongs when I'm trading. It's okay to have wrong as long as you guys have a trading journal, you record it down. So the moment price came down, wow, I was looking at it yesterday. Price continue coming down. I know most of you guys, a lot of beginner traders, not you guys, a lot of beginner traders, when price start to go this low, or you start to close out your trade, then only for price to go back up, and then you will be thinking, damn, I could have held on to my trade and I wouldn't have lost money. So the moment price broke this area, broke that area, that low right there, cannot get the thing out. So the moment price broke that area, I set that area as the ideal invalidation level. What do I mean by ideal invalidation? To me, this area is no longer valid. The trade is no longer valid already. So I believe that if price broke this area, I was expecting price to possibly, I was just hoping possibly come back up before it continue going downwards to hit my full stop loss. So this is how I manage my trade. Not only do I have a stop loss right here, a take profits, an entry, I also have ideal invalidation. So you must know when your trade is not going right. You don't just hold your trade and you tell yourself, yes, price is continue going up. You see, it continue going up. And then in the end, it still went down and hit my stop loss. So I have an ideal invalidation level. So once I had two accounts. So one of my accounts, I set it to break even. My live trading account, price went up. I set to break even the moment price hit this ideal invalidation level. And thankfully, since we cannot control the markets, price could have just continued going downwards, hit my full stop loss. I set my trade to break even. What do I mean by break even? So I was just hoping possibly for price to come back up, and price did, came back up to my entry and closed at break even. For the other accounts, I have 2 accounts. For my other accounts, so I'm actually doing a challenge, a trading challenge. So on the other accounts, I actually cut off half of my risk. I closed off half of my trade right here and I let it run. So in the morning when I came to office, I took a look. Wow, price actually almost hit my stop loss, but it continued going up. So somewhere around here, I closed somewhere around here. So my take profit isn't that much. In the end, it was like something like this. It was pretty bad. It was only up around 9 pips and I just closed it out. I was busy with work, so I couldn't manage it. So I closed it. And thankfully, thank God I closed it. Price continued going downwards. And then it also cleared my stop loss. So this is just an example of how I manage my trade using smart money concepts and ideal invalidation level. It's very important to have that. A lot of people actually don't, when they teach online, they don't tell you anything about ideal invalidation. They just tell you to let the stop loss do its thing. But obviously, you still got to manage your trade when it isn't in your favor. Price is not going in your favor, especially in my favor last night. So can move on to another trade, a possible trade. Smart money concepts. So we have this level. Let me take a look back. Just want to share with you guys one trade that I took. Okay, this is the one I remember. Last week I took this trade. So I took this trade right here, but I actually closed here. I did not close it at here. If I say I close it here, I'm lying right to the chat. So why did I close it here? Why did I close the trade there? So if you guys look to the left, there is what do I see? I always like to talk about the market imbalance level. And same thing, I will be implementing what we are teaching today, the pivot points. So we have the high, the low, the high, the low, pivot points. So I set this as, that day I was looking at this area. So this area right here, it's the 15 minutes market imbalance area. So I mark it out. What do I mean by market imbalance area? See, if you zoom closer, this area, price previously has not come into. So I'll set it as the red area for a possible reversal. So when I was looking, what I also like to do is, there's something that's why I don't use indicators. I'm just showing you guys plain how I look at a naked chart. You can see all my indicators right here are closed. How did I answer? I like to mark out the Asian range. So the Asian range goes from, let me check the timing. Okay, I'm using the New York UTC -4 timing. So I'd like to do is the New York time, the Asian timing, it's from 1900 hours, 19 o'clock. So I like to mark it out until 12 midnight New York time. You can see at the bottom, it's 000 hours. So I like to mark it out very clean. My chart is just like that every single day. So I mark it out black, mark it out as the Asian range. Top, center. So how did I know that price was going to go up? How did I know that? So we go on to the daily before that, to the daily charts. Let me get this out. What day was this? 13 October. So I actually took the previous day high. It was here. And the previous day low. Let me get back into the 15-minute charts. To apologize for that. Okay, so we got it right here. The trade happened on a Thursday, so this was the previous day, Wednesday, high and low on the daily charts. So just put that into perspective. Previous daily high. See, I like to mark it out. It's just like that. I don't use any indicators. Previous daily low. So PDH, previous daily high. PDL, previous daily low. So I just do it like that. And then I wait for the London session to start. So between the timing of over here, from this area to 2 o'clock, I do not touch until London session starts at 2 a.m. New York time. So I do not touch until it's 2 a.m. onwards. So what do we have here? Price, what did price clear? Price cleared the Asian low. So I like to wait for the Asian session to be cleared, either the high side or the low side. So marking this out, we can say the Asian low got cleared, Asian low plus sell side liquidity. So this area got cleared. What do I mean by sell side liquidity? So in smart money concepts, we have this area. Look at this, multiple wicks. So many wicks to be cleared. So price cleared all of those together with the Asian low. And I was waiting for price to reverse. So price continue going up and it cleared this high. Take a look, it cleared this high right here. So I already marked it out. Break of market structure. Let's move on. So I waited for the 15 minutes to close before I start to look for an entry. So on the 5 minutes charts, since price already broke here, same thing, I like to enter by the market's imbalance. So on the M5, look at this very minute area. Very minute area. Let me make it straight. So you look at this minute area right here. Very tiny. Let me zoom in all the way. You can see previously price has not tapped into this area. So I set a buy stop here. You can see price actually tapped into it. Very tiny. Price tapped into that area. And then I set my stop loss at the very bottom. Why do I set my stop loss at the very bottom? Because there is another market imbalance right here where price could potentially come down to before it goes up. So I set it as that with my take profits up to the M15 market imbalance, and I just close it right there. This is the M15 market imbalance. You can actually see this, the high is the previous day high and the previous day lows. It's also a pivot point, a pivot high and the pivots low. So in a way, I'm actually also implementing pivots into my trading, just that I draw it out manually. Okay, and then it became a 1 to 2.42 risk to reward trade. Okay, do you guys have any further questions regarding this trade? Do let me know in chat. Do let me know whether you guys are interested to learn more about these smart money concepts. Maybe I can ask IronFX. Maybe we can have a session about it in the future. I can share more about it. Any questions, do let me know. This is how I actually refine my trade without using any indicators. Okay, yes, it would be great. Very nice. Any validity in the marks pivot? Oh, I'm not presenting that today, unfortunately. I do apologize for that. We are interested in SMC. Yes, SMC is very nice because there are no indicators involved. It's just a plain chart. I'm just using a plain chart without any indicators. Explain more about SMC. Yes, I like the attitude, that learning attitude. That's how I felt when I first saw about smart money and Wyckoff. Let me open this up. So for smart money concepts, it's actually quite, so you can actually have a better understanding, I would say a better understanding in smart money concepts if you read up on Wyckoff. Read up on Wyckoff. Let me type it out in chat. Read up on Wyckoff 2. Yes, the value gaps. The value gaps are taught by Inner Circle Trader. I think I mentioned it in the past webinars that I hosted. So Inner Circle Trader, I'll just credit him. Inner Circle Trader, ICT. He also taught about the fair value gaps, or also known as the market imbalance. So you can already see that I'm implementing. So this area, I took it as accumulation. So what is this? Wyckoff accumulation. That's why I asked you guys to read up on Wyckoff, where there's an accumulation area. So it better explains why on smart money concepts after it clears some liquidity and it continues going up. So for this entry, as what Stephen has mentioned, value gaps, the fair value gaps, I took it from Inner Circle Trader. And same goes to the market imbalance right here, Inner Circle Trader. And this high and low thing is also the pivot points. So you guys notice I actually developed my own, I wouldn't say developed my own. I combined multiple trading strategies before and backtested it first before I implemented it on the live account. Okay, explain more about SMC. You can actually learn more about SMC on YouTube. I'm sure quite a few YouTubers are actually teaching it for free. They don't charge anything. You can learn it for free online. Okay, moving on. You guys can actually screenshot this. So what happened here was there was actually a news. Last week there was a news, so let's not get into that. You guys want to screenshot this trade down? Do screenshot this down. So when you're learning smart money concepts, you can maybe look back on this and kind of understand more in depth on why I actually entered the trade the way that I did. Any more questions, do let me know in chats before we end this session. I'll check with IronFX whether it's possible to hold a smart money concepts session into the future. Read up on Wyckoff. So if you want to know more about Wyckoff, a very, very simple one, you guys can actually check out. Let me show you guys. People, okay, Doge. So you can see this is my personal trading account. I'll send it to chat. That is my personal trading view account. I actually did a short series where I did it on my own at home on the educational series on the Wyckoff accumulation. So it actually kind of explain why. What does it explain? Why price after it clears the sell side liquidity, why price continue heading upwards. So you guys can read this, a short little education thing, Wyckoff accumulation part 1 and Wyckoff accumulation part 2. You guys can follow me if you want. Follow me on TradingView if you want. I've sent it over into chat. Okay. Any more questions? Do let me know. So let me send the link of this also, just in case you guys want. Yeah, I'll probably be writing more. So probably on the pivot points and maybe smart money concepts. So if you guys want to have a short, like a quick summary on what is smart money concepts or pivots, I'll be writing it down on my TradingView accounts very, very soon. So stay tuned. If you want, just follow me. So I got only 11 followers. Oh, someone followed me. Thank you very much. So we increased to 12. Just follow me. I'll be posting more educational series for free. You guys can learn. Hey, thanks. No worries, man. Okay. Any further questions before I end this session? We have a minute left. Any more questions before I end? Okay, thanks. There are no further questions. Hey, thank you very much for following me also and for the support through this. Okay, now we got 13 followers. Very nice. Hey, bye. Hey, thank you very much for joining me today, as usual. My name is Chen Yongjing, and I hope you guys have a good day and take care tonight.